Credit card loans. What are they really? It's not just about swiping at the store. When you take a credit card loan, you're borrowing cash against your credit limit, not just making purchases. This cash comes with different rules and much higher risks than regular card use. Used wrong, it can trap you in debt with sky-high interest. Used right, it can be a lifeline in a true emergency. In this video, we'll break down what credit card loans are, how they work, and how to avoid costly mistakes. Stick around, this is info your bank won't highlight. Let's get specific about credit cards and how they function. We need to understand the ins and outs of what a credit card really offers, beyond just a convenient way to pay. Your credit card essentially performs two distinct functions. It lets you buy stuff, making purchases both online and in physical stores, and it also lets you borrow cash, offering what's known as a cash advance. Regular purchases typically come with a grace period, a window of time, where if you pay your balance in full by the due date, you pay absolutely no interest on those purchases. But a credit card loan, more formally known as a cash advance, operates under a completely different set of rules. With a cash advance, you're essentially taking cash directly from your available credit limit, rather than using your card to buy goods or services. The crucial difference is that the moment you take that cash, interest charges begin to accrue immediately. There's no grace period offered, and there's definitely no free ride when it comes to interest. You can typically obtain a cash advance at an ATM using your credit card, or sometimes through a convenience check provided by your credit card issuer, and in some cases, even via a direct deposit into your bank account. It's important to note that the amount you can borrow as a cash advance loan is almost always significantly less than your overall total credit limit on the card. Why is this the case? Well, because providing cash advances is inherently riskier for banks and credit card companies. They have no tangible asset to repossess or recover if you default on the loan. So, this higher level of risk for the lender ultimately translates to stricter borrowing limits for you and considerably higher costs associated with the loan. Always remember that standard purchases made with your credit card are typically granted a grace period, while cash advance loans most certainly do not. Unfortunately, many people mistakenly confuse these two distinct uses of their credit card, and as a result, they often end up paying significantly more in interest and fees than they initially anticipated. Therefore, it's absolutely crucial to fully understand this fundamental difference before you even consider the possibility of taking out a credit card cash advance loan. It's important to recognize that a cash advance is not simply another way to spend your credit. It's a completely different type of financial product with its own specific terms and conditions. Make sure you thoroughly know and understand the rules, or you risk facing potentially expensive and long-lasting financial consequences. Here's where it gets expensive: interest rates and fees. Cash advances have much higher APRs than regular purchases, sometimes 25% or more. On top of that, you'll pay a cash advance fee, usually 3–5% of the amount borrowed. For example, borrow $1,000, pay a $50 fee, and start accruing interest immediately on $1,050. This debt grows fast. Fees plus high interest from day one. Minimum payments barely touch the principal, so the debt lingers. Payments above the minimum go to the highest interest balance first, but minimums can be allocated however the bank wants. Always check your card's terms. Find the cash advance APR and fee in your agreement. Write them down. Know the true cost before you borrow. Cash advances are one of the most expensive ways to get money. If you're not careful, a small loan can balloon into a big problem. Investigate before you act. Don't let surprise fees drain your wallet. Are credit card loans always bad? Not always. The main pro: speed. In a real emergency, you can get cash fast, no paperwork, no waiting. It's unsecured, so you don't risk your car or house as collateral. But the cons are serious: high fees, sky-high interest, and immediate accrual. Using a credit card loan for anything but a true emergency is usually a costly mistake. It can hurt your credit score by raising your credit utilization and signaling financial distress. The debt can spiral, minimum payments barely reduce the balance, and interest piles up. Relying on these loans can mask deeper financial issues like overspending or lack of savings. If you're reaching for a cash advance, often it's a sign to reassess your finances. Use this tool only as a last resort. The risks far outweigh the benefits for everyday needs. Don't let a quick fix become a long-term problem. Okay, so you're in a tight spot. If you truly need a credit card loan, despite all the warnings, let's walk through the process. We're going to cover how to apply and what it takes to qualify. But remember, this should be a last resort. Here's how it works, step by step. We'll break down the process so you know exactly what to expect. Most cards let you take a cash advance up to a set limit. It's not unlimited, so be aware of that. To find out your specific limit, check your statement or online account. It's usually clearly displayed. You'll need a PIN for ATM withdrawals. This is how you access the cash. If you don't have one, request it from your issuer well in advance. They'll usually mail it to you for security reasons. You might also get convenience checks in the mail from your credit card company. Or you might see direct deposit offers when you log into your online banking. These are often disguised as helpful options. Be careful, because these are all forms of cash advances, regardless of how they're presented. Some issuers offer installment loans with fixed fees instead of high APRs. Look closely at the fine print. These can still be very expensive, but sometimes they offer a more predictable repayment schedule, which can be helpful. Qualification is generally easy. If your account is in good standing, meaning you're making payments on time, and you haven't maxed out your limits, you're likely eligible. But just because you get the money doesn't mean you. Seriously, think twice. The process is designed to be fast and tempting, offering instant gratification. But the costs associated with cash advances are incredibly steep. No one will stop you from taking out the advance, and no one will ask if you have a solid plan to pay it back quickly. The responsibility for managing this debt is entirely yours. It's a solo mission. So, know the terms inside and out, and only use this option if it's absolutely, positively necessary, and you have a clear repayment strategy. The bank profits handsomely from your urgency and desperation. It's their business model. Don't let them profit from your mistakes. Explore every other possible avenue first. If you've taken out a credit card loan, perhaps to cover an unexpected expense or make a large purchase, your top priority should be clear. Pay it off, and do it fast. The longer that debt lingers, the more it will cost you in the long run. Every single day you carry that balance, you're essentially paying a premium in interest. These charges can quickly add up, turning a manageable debt into a significant financial burden. Therefore, it's crucial to make a concrete repayment plan. Scrutinize your spending habits, identify non-essential expenses, and throw every extra dollar you can find at the debt. Even small additional payments can make a big difference over time. Always, without exception, pay more than the minimum amount due, and ensure those extra payments go directly towards the balance with the highest interest rate. This strategy, known as the debt avalanche method, saves you money in the long run. Consider a balance transfer to a credit card with a 0% introductory APR if you qualify. This can provide a temporary reprieve from accruing interest. Just be sure to watch out for any balance transfer fees and commit to paying off the entire balance before the promotional period ends. Otherwise, you'll be hit with a potentially high interest rate. Or explore the possibility of obtaining a personal loan with a significantly lower interest rate. This can be an effective strategy to consolidate your existing credit card debt into a single, more manageable payment. Ultimately, the primary goal is to get out of high-interest debt as quickly and efficiently as possible. To avoid finding yourself in a similar situation in the future, prioritize building a robust emergency fund. Aim for having 3 to 6 months' worth of essential expenses readily available in a dedicated savings account. That way, you won't need to rely on expensive credit card loans when life inevitably throws you a curveball, be it a car repair, medical bill, or unexpected home repair. Financial discipline and careful planning are, without a doubt, your best defenses against accumulating unnecessary debt. Turn this experience into a valuable learning lesson. And make sure you don't let a short-term financial fix become a long-term financial setback. Take control of your finances and proactively protect your financial future by making informed and responsible decisions. Credit card loans are fast but costly. Use them only as a last resort. Always read the fine print, know your fees, and have a plan to pay it back quickly. Explore all other options first: emergency savings, personal loans, or payment plans. If you must use a credit card loan, attack the debt aggressively. Financial literacy is your best defense. Keep learning and make smart choices. Thanks for watching. Share your experiences in the comments, and don't forget to subscribe for more financial tips.